Welcome. So we're still here in the beautiful Istanbul. It's a gorgeous day. I'm joined by Fadi, and we are here at the World Business Angel Investment Forum. We've taken some time out. It's been a busy couple of days already. Fadi has very kindly agreed to join us, share some of his insights and wisdom from the Middle East. So I guess perhaps we start with just a very quick 2-minute background on you and your experience. I know you've kind of started off in the financial world, deviated a little bit, and now come back to it. So do you want to just give us that quick story? And then
thank you for inviting me. I have a financial advisory firm based in the UK, Capital Finance, which is a result of me having a long experience in investment banking. I started in New York and London, and from there I saw an opportunity to go into aviation. So I went as an entrepreneur and started up a couple of airlines, actually 3.
Just as you do.
Yeah, three small airlines.
Yeah.
And then I went back into advisory services and got involved with some of my clients in co-investing or co-running companies in different sectors. And now I do, this is my core business, and then I do a lot of activity on the side, which is giving back to society and to NGOs, supporting SMEs, working with chambers of commerce, doing anti-corruption work in specialized organizations and things of the sort.
Great. And you're based in Lebanon?
My family is based in Lebanon. I am based in a seat on the aisle in the aircraft because I spend a lot of time flying and traveling around the world.
Yeah.
So
I know the feeling. Okay, so first of all, nice to have an investment banker that has some real world experience of entrepreneurship. It's a refreshing, and it means the depth of conversation is that much better. So look, one of the things that, I mean, we joke about. You joked earlier about how to lose money as you get into the aviation industry. But one of the things I'm particularly interested in, your investments, opportunities, you work with companies, you advise companies that are looking into the Middle East. What are some of the trends that you're seeing in that space? What's some of the advice that you're giving to companies there at the moment?
See, today I think there's something which is lacking maybe a little bit in the Middle East, but also in other countries, which is that we've lost the importance of values. And I'm trying to push the value of values.
Right.
And I think if we go back to basics and we go back to how our previous investors used to do, where look at really fundamentals before making an investment and making sure that the numbers are good and the opportunities are well-founded, rather than today just grabbing any opportunity and running because we're attracted by the potential returns upside. So what I'm trying to do now is talk more to investors about, watch out, don't play this game. This is good if you are very diversified in a portfolio approach, where you say, in the past we had the 10-to-1 formula, which is you invest into 10 companies and one will be successful and compensate for your 9 losses. In today's market, it's, I think, 1,000-to-1, because you have a lot of opportunities coming and you have a lot of people looking to raise funds and come with bright ideas, but sometimes those ideas do not materialize into concrete projects and are not investment worthy. So in that, when we talk about going back to basics, I also talk about the intangible returns of making sure that you are doing it in an ethical methodology, where you give a lot of importance when you're doing your scorecards as to whether these projects comply with certain standards. And those standards are quite varied, but they can touch on most of the important things. Social impact is one of them, environmental friendly is one of them, equal opportunity employer, gender equality, besides, of course, the important concepts of ethics and transparency and quality and all of that.
So we'll come back to that, because I think that is key. But just going back to your comment about the 1,000 to 1, and I know we're at an angel event, so there's a lot of enthusiastic startups with great ideas. Now, I personally, in the businesses that I'm involved, we kind of sidestep that. We only work with established businesses that have already proven track record and profitability. But I understand for other people like that space, and it's very important for the ecosystem that investors want to get that. What are some of the I guess tips or tricks that you've learnt over the years for trying to narrow those odds from 1,000 to 1?
I think from the company point of view, from the entrepreneur's point of view, or the startup point of view, they are sometimes misled by the definition angel investor. I think an angel investor is somebody who's going to throw money at them and just walk away and let them do their thing. And that's really not true. Yeah. So there's a lot of deception in the way they approach the investment and in the way they follow up on the investment. So first thing that we should talk about is to make sure that they realize that this is an investment. Yeah. Whether the investor comes from an angel investor background where he's interested in other byproducts of the investment that are sometimes not only financial, or whether he's a vulture investor, a real joint venture acquirer looking for a venture capitalistic approach, the investment criteria remains the same. Yep. So this is the first thing. Second, from the angel investor point of view, sometimes we have angel investors giving money to people whom they like, to sometimes people who are pursuing a dream that they can associate themselves with, rather than doing the basic analysis of an investment.
Fundamentals,
the fundamentals. Yeah. So we come back to the importance of fundamentals. And today, after this hype that we've had in the market, I think there's been a bubble. Many people have thrown a lot of good money after projects that might have been good, but they were premature and not well planned and not well pursued. So we have to make sure that both the investor and the entrepreneur are doing what it takes to come closer.
Yeah, so I think you're absolutely right, and I think I think for all the good that's come out of the innovation in Silicon Valley, I think it's taught the world's entrepreneurs, especially the younger generation, that the model for entrepreneurship is to come up with an idea and then go and seek funding. And so the question is always, how do I get more money, rather than how do I solve a problem for a client? How do I create value for the client? And it does set up this false ecosystem, and it sets up this environment where I see, if you're asking the wrong questions, you're always going to get the wrong answers. If you're constantly asking about investment, you're always going to get those answers, and it's the wrong thing. So going back to the good old-fashioned fundamentals of values and profits and things. In the capital markets, value has actually hasn't done that badly in the last decade. It's just been so outshone by growth.
By the few, not a lot.
Yes.
So there are a few oddities that have had exponential growth, but there are many that have had disastrous failures. And if you plot all of this together, I think you see that the growth curve is maybe not as bright as we see it, because we all hear about the success stories, but we don't know about the tears that have been shed on projects that have gone down the drain. Yeah. And yesterday we were talking in one of the sessions at WBAF that many startups are concentrating on raising funds, and they think their job is done once they have the money in, rather than on making the business plan profitable and sustainably. So, so their focus is different. And once they do a Series A, Series B, Series C, whatever funding, they're okay. Now they think about the second round of raising funds, and they look at that. Now, how can we do valuations, and what would it take to attract the second level of investors, rather than how can we make a good return for our investors and for ourselves in seeking profits and making sure that our business is sustainable. Yep. So they come to a certain stage where they just tip off and decline, and all the money they have raised is lost.
Yeah, okay. So look, one of the other things that I'm always kind of conscious of when you come to any gathering of investors is that there's, without being condescending, there tends to be smart money and not so smart money. And the not so smart money always tends to be chasing what's in the media. And it's the next new thing, whatever, artificial intelligence one year, or cannabis last year, or crypto the year before that. And yet, whenever I talk to the investors that are really making money, they're never talking about that stuff. They're always looking at things behind. I get the sense that you're plugged into quite a lot of smart money around the world.
I think that there are,
that
for me, it's maybe a different way of looking at it. I don't look about smart money or non-smart money. I look about learned investors, professional investors, and non-professional investors.
Yeah,
and I think, if you remember the old prospectus of investment bankers, there's a disclaimer that you should sign that you are, capable of making this investment. You've looked at all the information. You are a qualified investor.
Yeah.
Otherwise, you're not allowed to look into that investment.
Yeah.
This issue of being a qualified investor is what I think today's market is lacking. Because anybody who has some savings or some money goes to a social gathering, hears his neighbor, his friend talk about something they have done, or reads in the newspaper and then hears of this opportunity. And you're right, they go after what they have seen without learning enough about it. It's like, if it succeeded for somebody else, it will succeed for me.
And the barriers to entry are so low, whereas when I started building companies 20 years ago, IT systems, I was spending $200,000-300,000 on an IT system that today I can get for free, and it's 100 times better.
Exactly.
And so now I see angel investors coming in with writing $10,000 checks, and that's pretty much open to any middle market manager who wants something interesting to talk about.
And also, in the good old days, I have enough white hair to talk about the good old days.
You have the advantage over me.
It was difficult to get investor money. Raising equity was not an easy thing to do. And you had specific sources for equity. Today, everybody's an investor. And because of the hype, because of as you mentioned, the small barrier to entry, the ticket item has become very small, and because they think it's an easy way to supplement their income. On the other hand, also, you have very low barriers to become an entrepreneur. People sometimes do not pursue enough educational foundation and decide to go early on to set up their own company. Because they read about somebody who started in a garage and decide they can do the same. Or they leave jobs, well-paying jobs, say, oh, I'm not going to be an employee, I'm not going to take this hierarchy in a company, or this bureaucracy, or this management style, I want to be my own boss. So on both sides, I think there has been a shift away from, again, fundamentals, and that we should go back to fundamentals. And,
I definitely agree. It's something I've been saying for a while, and I think the media has glamorized entrepreneurs to a point where a lot of people are going, I want to be an entrepreneur, without understanding the fundamental and just how painful it is when it goes wrong, as we can both attest.
Exactly. I think I remember the business class we used to have, and we used to aspire to put a manager or a vice president or a president or whatever. Now everybody has founder, co-founder. So the aspiration is to have that title. I'm a co-founder or I'm a founder, rather than going up the ladder step by step.
So look, I want to get back to geography, because there are, one of the beauties of a gathering like this is we have investors from all over the world. It's a great opportunity to see what's thriving in some countries and not in others, and what are the opportunities. So you are very well plugged into that Middle East space. What are some of the opportunities that you're seeing there, that if somebody hasn't previously invested in that area and they're thinking about it, what are it's a wide and diverse region. What are some of the areas that people should be looking at, you think, and over the next 5 to 10 years?
Investors from the Middle East in the past used to go to traditional investors. And they used to give their money to investment banks, and they go into portfolio management, whether it was discretionary or advisory. They used to follow the stock market, and they used to be a player among many other players into those big companies. And then entrepreneurs used to go into construction, into businesses that rely on the government spending on the budget of the country, and this is how they are focusing. Then we have certain centers and places that started attracting, especially Dubai, for instance, that have started attracting entrepreneurs and investment companies that are looking at it a bit differently. And now you see more and more money coming from the Middle East that is matching the US or European investment vision, and they are willing to take risks that are associated with IT company, with knowledge economy, and with things that they don't necessarily understand. However, most of the investors want to associate their investment with something that is a business that they know something about. There's a reluctancy in Middle Eastern investors to go into an activity that is too far from their base activity, because they think they cannot relate to that. And that's maybe a good thing, maybe because their value added is zero beside the funding. Whereas sometimes if you have a value added investment that goes a little bit in terms of supporting the company in which you've invested in outreach and doing something differently in scaling or in sourcing, your return will be higher. The other problem I see is that most Middle Eastern investors are not patient enough. They look for the quick bucks, and they're used to high returns. Because in the Middle East in general, the rate of return on your business is high. The payback period is very short. And if you always look at those kind of investments, by definition, they are risky investments. And many Middle Eastern investors don't like, medium payback periods, and they want returns in the high teens rather than what's international standards. And that is now, I think, changing, because when the market goes down, they tend to lose much more than had they been in a normal investment.
So they're getting that, looking for those sort of high teens, relatively short term. Is that predominantly kind of debt fueled? Are they buying bonds, or the corporate bonds, or
equity.
Everything?
No, I mean bonds. Institutional investors buy bonds easily, of course, but private investors are equity oriented. If they decide to invest, they will not go into a debt structure. They will go into an equity structure because of the ego.
But they're still looking for those short-term returns.
That's what makes it abnormal.
Sure.
The ego is I'm an owner of this business, or I'm a funder of that business, and they want to associate them with that. Actually, you also see many institutional investors going for the high visibility transactions. So they like to go into projects that attract a lot of attention. Again, because of ego-driven investment decision making.
That's an interesting strategy that a lot of entrepreneurs, I've noticed, are starting to favour. Is if you can get some of the media, get some celebrity endorsement, it's a great way to attract the.
And now with social media, it's even worse, because you can go on social media and toot your own horn, blow your own horn, and say, look what I've done, or this is me taking an award, or doing that, or attending a ceremony in which we've opened a new activity or whatever.
Absolutely. Cool. Well, look, fascinating stuff, and I think there's it's a really interesting area. Now, we touched on, I just want to come back to, you've talked about impact, and we touched on earlier how what's positive impact for someone might be negative for someone else. What are some of the, and I know this is an area that you've kind of put a lot of time and effort into, what are some of the really good projects and investment opportunities that you're seeing in that space at the moment?
Well, first let me say that impact investment is a situation where you double up your return. because you're supposed to get almost the same kind of returns financially.
Yeah.
I mean, you will not give up return if it is a positive impact or a negative impact. And you get the positive impact return of doing something which is good to the economy, to the environment, to society, to whatever it is that your domain in which you're acting. I think we're seeing more and more investments into education, into health, into renewable energy. These kind of investments are now proving to have a very good return in terms of pure financial rate of return, and the impact on them is quite good, which is different from investment into infrastructure, for example, which was traditionally what people used to like a lot in the Middle East.
Very interesting. Look, I could talk all day, but I'm very conscious of your time, and we've got a busy couple of days ahead. So thank you very much, Fadi. It's always a pleasure.
My pleasure.
Great to see you every year here.
See you next year.
Yeah, definitely. And
looking forward.
And if you don't mind, we'll share your contact, your LinkedIn profile on the thing, and people can get in touch if they have an opportunity. Great.